Welcome everybody, how are you? It is the 17th of February. Welcome to Trade Live with IG. I have a small injury that we will go into later, but it was not from celebrating the Scotland-England score too much. No, it was not. But also just a special word on this episode. We are dedicating to a very special man called Derek, who is our commodity specialist, a big bull of copper. But he went through a big heart operation yesterday. So all the best in your recovery. Derek, wishing you the best. Now, I've got a very special guest for you because our poor man Piers, stuck over there. He's fallen sick the last 3 days. He's been in bed. Here we are, we're back everybody. Sorry about that, we had a little fault there. I think it's because I started talking about Scotland beating England in the rugby and suddenly producer Phil switched my microphone off. So in case nobody heard, we are dedicating this episode to Derek. Derek is our commodities specialist. He's 93 years old, big copper bull. We could do with some of that bullishness in copper today, the way the price is acting. But he went through heart surgery yesterday and wishing you a very speedy recovery there. Another man who we're wishing a speedy recovery is Piers, because he's been in his bed shivering the last 3 days on his holidays. No laughing at home, everybody. It's not funny that he's ill on his holidays over there in the Hamptons. But we've got a very, very capable replacement, some would argue, far better and well qualified to speak to you today. It is Will Nutting, ladies and gentlemen.
He's not going to like you for that.
He's not, is he? But do we care?
He's not going to like you for that.
Well, first of all, let me see. So I would introduce you as taking a long-term thematic approach, but it's a lot more about common sense, isn't it? And judging the markets that way rather than any crazy quantitative thinking or anything like that. But give everybody an idea of your level of experience in these markets.
Listen, I've been doing this for 36 years, but I've been writing nut stuff for about 7 years. I write twice a week. And I think the bit I have at the bottom is I call LOTFW, which is look out the F window. And I think a lot of investing today is not really about spreadsheets. It's actually about looking out the window and looking at real things. As I look out the window now, I'm in northern KwaZulu-Natal in South Africa. Can't see any animals, but I've got a great view here. So it's great to be looking out the window where I am at the moment.
And that's it. One defeat in the rugby and you disappear to a different continent.
I'm an Irishman, so don't try me with that brush, okay?
So, Will, you've been on the show in the morning a couple of times, but obviously a lot of the Apex Army we have in, all Piers' disciples. Tell us how you know Piers. How did you guys meet each other in the city?
I met Piers randomly. I just thought he was this sort of this. I think he was as enthusiastic about markets as I was, but he kind of looked like he sort of, he played in a rock band at night, and he had this sort of these sort of maniacal, these manic eyes, and this manic style, and it was very kind of it was very captivating, and he eats, sleeps, breathes, and drinks markets, and kind of a little bit like I do. So that's, I think, really where we kind of bonded.
And then what about your career? Where did you start in your career, Will?
I started working for investment banks. I started working for Fleming's originally. I never went to university. I couldn't, well, maybe because I couldn't get there, but I had a place at American University, never took it up. I went to work for Fleming's. I did Japanese equities. And then I ended up doing US, worked for all the big US houses, worked for America, worked for Lehman. And then eventually ended up, my last kind of proper job was at People and doing US stuff. And then I left to really go it alone to write nut stuff, which I've been writing for about 20 years anyway. Right. When I sat on a desk, but regulation meant that I couldn't really do what I do, which is without a hierarchy, without a script, I can really say what I want about markets and how I see things are. And I think, not having to ship down a pipe every day that's created by someone else is, at least I eat my own cooking. And sometimes, if you sit on the loo at night, it focuses you not to cook better the following day.
Well, and I think the thing that I love about it is you also run that portfolio, right? So much like we're doing on the show just now, we've got a portfolio, we're putting our money where our mouth is, and we're backing our own ideas. And you like to run that. Let me get that up for you. Maybe we can go through.
I was about to say, that didn't look like my portfolio.
Oh, hopefully it's performing better than my portfolio at the moment. But yeah, there we go. Now, it's unfortunately not in the best.
That's entirely by design.
How would you like to start? Would you like to look at some of your top ideas, or give the overall view in the world?
I think it's more the overall, because I think there is so much disappearing down rabbit holes. There's so much love with what's working, and to me, trying to catch the lows and a lot of stuff in the S&P is you're kind of trying to invest in the exhaust fumes of what's worked for the last 15 years. Now, when you get into the exhaust of a plane or a Formula One car, you can have this momentary feeling of stability and you can get the toe. But as soon as you move outside it, it all goes to shit. And I think that, to me, is slightly how the market feels at the moment. It feels like a lot of people in the toe. And I think we're just going through this big move. I call it, it's an AI narrative market to an AI capital cycle market. That's fundamentally different. When you look at the ratio of free cash flow to capex for the big 7 tech companies, these are suddenly becoming very, very big entities, different entities.
And almost utility-like on the hyperscalers.
Well, yes, almost utility-like on the hyperscalers. I mean, Nick Feingold, who I have an enormous amount of respect for. And Nick was talking at the weekend about wanting to get exposure to Elon Musk and saying you can get it through Scottish Mortgage, it's SMT. And I think he's right about that. I would take issue. I'd rather have it through William DeGale at Blue Box, because I can own it through the picks and shovels. I don't need to own the gold rush. I can own it through the picks and shovels at far lower multiples, far less consensual positions. And so it's just trying to say the real bottlenecks are there. And I think as you get to the bottlenecks, those real constraints, I think, are incredibly investable. In the last 3 to 6 months, I suppose, I think we've proved that that's really where the alpha is.
Exactly. And that is turning more towards resources, and specifically sort of scarce resources that you look at.
But it's asset light, scalable businesses that have moats. And when it comes to, as I say, real bottlenecks, it's owning the companies that have got real bottlenecks. So it's tin, it's tungsten, it's uranium, but it's not uranium, I think, anymore just for sake. It's the fuel side of uranium, because it's being able to repurpose existing nuclear fuel rods. It's being able to provide what the market needs right now and it's going to need in the next 12 months. It's not investing in, jam in 5 years' time projects.
Right. Okay. That's interesting. And what has got us to that point? Why is it the next 12 months on those fuel rods specifically?
Because I think the demand is there. You look at where capacity is, you connect the dots between the capex of the hyperscalers, the fact that everyone wants an AI engine, everyone wants an LLM engine. It's not just to make your cat look like your dog or put ears on your golf, in AI. It's actually doing a real job of work, and the computing capacity that these LLMs suck up, is a massive issue, and we don't have the grid capacity to do that. So companies like Fermi are obviously putting on technology in a very big way. But when you look at where the real needs are, I look at it kind of Maslow's hierarchy of needs, Maslow's pyramid, where the needs are, is energy. And when you look at where energy is, it's fossil fuels, it's coal, it's uranium, it's that whole food chain, and that whole food chain is pretty much working. It's worked very well for the last 6 months, and it's working incredibly well. And I think it can continue to work.
What's the risk to that? Is it another sort of DeepSeek moment where somehow you manage to find a much more energy efficient route for LLMs and AI?
Yeah, and I just don't think that at the moment I see what that is. I mean, we talk about fission versus fusion, gas turbines, etc. But I think you just got to see where the investment is. And I think everyone focuses on future-proofing their business now. So I think in a world where you need to future-proof your business, you've got to make decisions right now.
How do you see the whole argument around data center debt then? Because that seems to be the stranglehold on the market at the moment, along with the software argument. Now, software, did you see that coming in the last sort of 10 days? The absolute destruction of some of these names down to 1 or 2 releases of AI technology.
So it's so weird. I have, and I've written about it a lot for the last 6 to 9 months, because I have the benefit, I guess, of being involved with a bunch of blockchain guys, and we've looked at the whole AI agent space and understood what's going on at an AI agent, level. So therefore, I've looked at the commoditization of a lot of software and saying that a lot of this stuff ultimately can be done at a far faster, far more efficient rate. I'm not going to say that, I haven't owned Palantir for a year.
Yeah.
I haven't owned most of these companies. I've very little big tech and very few software companies. I guess we've been positioned to be out of that stuff. Now, the flip side of it is I'm not feeling that smug, because I've owned a lot of the blockchain tokenization stuff.
Oh,
that
been brutal.
Even owning the tokens has been a tough place to be, So, but I think, when I connect the dots on where all this goes, I'm suddenly seeing the utility side of blockchain digital assets. I've talked about helium till I'm blue in the face. It's been a disaster, but it's up 70% in the last week.
Yeah, wow.
And I think some of these projects are really becoming fascinating. They've got helium just to branch off on it. Helium now, as of now, has 3.4 million users. So it has 1% of the entire cell phone user base in America is currently using helium. Well, I think that goes to 10%.
Right.
And by the way, this is wireless offload from AT&T, and this is a company that a week ago was valued at $120 million. So today, I think you've got to look at the blockchain world and try and understand what's going on in blockchain, digital assets, AI agents, and then look and understand what's going on. You see Raspberry Pi up today, up another 30-40%.
That's
exactly. Well, it's basically a decentralized physical network. So that's kind of the Lego of building work.
This is of course one of the very few stocks on the London Stock Exchange that we can say is absolutely related to AI, right? To blockchain.
I mean, it's as core in a blockchain company as you can find in the UK.
God, it's had a really rough time of it, isn't it? And does the graph there, does that incorporate, what we've seen in a lot of these names? You mentioned helium up 70% in the last week as well.
I think so. I mean, I think it's the difference between the market appreciating these guys have got real businesses, and they've been building in advance of a more open source, less captive world of development of software on platforms. And I think this is where you're going to see. I think you're going to see this parallel portfolio that I've talked about a lot, which is that you've got the existing legacy platforms of businesses. You've got a whole bunch of new digital assets coming in the world of AI agents, etc. Everyone discovering Claude. And it's almost like you're going to have this kind of your mirror AI bot of yourself. And you can get to a slightly crazy world when you start to think about this stuff. But I think that's why what's happening is happening at the moment.
Okay, let's move on to mining and resources, commodities. Glencore is in your basket. Did you expect the M&A to go through? Was that just a sort of cherry on top?
I think cherry on top. Generally, bunch of incredibly smart people doing smart stuff around the world. And this, to be honest, is kind of like the Google of AI. What Google is to AI in its whole ecosystem, Glencore kind of, to me, is in the mining sector.
And do you think there's still an argument for that move since the bid happened? Right, let me take that back to a daily chart. Sorry, that was on weekly. Since the bid happened, do you think there's still a good reason for them to be, £5 and above going forward? Like a specific catalyst?
Absolutely, because I think we're just in a world where a lot of slow, big money is just waking up to this whole, sector rotation that's going on. Again, what I say is, going back to a world, harder assets, less leverage, more real demand, Maslow's pyramid of needs. And Glencore is all about what the world needs.
I loved your point that with 70% of the all world index now in the US and the Mag 7, such a huge combined market cap, if money starts flowing out of the US and out of the Mag 7, then the redistribution to other markets, the potential is just massive, isn't it?
It's massive. I mean, I think the statistic that I got from a friend of mine, Rupert Mitchell at Blind Squirrel, I think he said that it's 13 days of the NASDAQ. 13 days of market volume is the entire Latin America. We own Mercado Libre. We own, in the kind of macro overlay bit of the portfolio, I have ETFs. I have emerging market ETF. I have the Brazil ETF. I was in Colombia in September. Actually, a country I didn't particularly like very much, but I can absolutely understand what's going on there, and totally understand that if you take it that the geopolitical issue is you're now going to be allowed to control your backyard and what goes on in your backyard. I can understand from a Trump administration perspective that they focus much more on what goes on in their backyard. For certain countries where there's big conflict that are not in their backyard, but I can understand why Latin America isn't there.
Do you think that keeps on going? I have to watch because my memory of reality and perception of what's in the real world. I watched The Night Manager recently. What a show. Yeah. Have you seen it?
The new one.
That's you, isn't it, Will? That's you in Colombia. I don't know which character I mean, but you're one of them.
Yeah, I'm not sure. What you mean? The fat guy in the bar? Yeah, probably.
Well, one chance you will be to be seen at the bar is, of course, on this upcoming educational seminar that's going on.
Yeah, we're doing it with Piers, aren't we? I think there's three of us, Piers and me and one other. I have no idea what to expect. I like Piers. I think as I say, he's one of the hardest working guys. He's built what he's done in the last few months is extraordinary. I just said to him, I'm happy to help in whatever way I can.
And what's your topic on the day going to be about?
I think it's going to be pretty much what I've talked about today, which is I think trying to get from where the world is to where the world is going. As I say, and I think a lot of that is, it was interesting. Lots of people, debating the Marco Rubio speech at the weekend in Munich, and I wrote this thing 3 years ago, and we talked about rise of the oppressed and revenge of the colonized. And I think this is a natural extension of rise of the oppressed and revenge of the colonized. And when you look at what's going on globally at the moment, you are in this new multipolar world, and in a multipolar world, you start to think about what you need. And you need defense, you need security, you need food, you need basic building blocks and resources. And that, to be honest, is when you look at where all the market capitalization in the world is, and we talked about that with the 70 stocks in the US, there's 70% of the stocks being US stocks in the top 30 companies in the world. I'm not saying for one moment that I think that's going to 50%. But I think even if you get a 10% shift in asset allocation, you end up having the pint mugs and the shot glasses. And the pint mugs is, where you get all the mega cap market cap.
That's a great analogy.
If you shake the table and the pint mugs slop, they're going to slop into the shot glasses. And I'd rather own the shot glasses than the pint mugs.
That's exactly what's going on, isn't it? But what are your favorite shot glasses?
Well, I guess I look at I hope that it's my portfolio. It's so far this year, it's been offshore drillers, it's been Tungsten West, it's been First Tin.
Chart up, guys.
It's a whole bunch of stock. It's been a whole bunch of stocks in the Middle East, in the North Sea rather. It's power, nickel. It's Atom, which is fertilizer. It's BAE Systems, which is defense. Tidewater is boats for offshore. Every single one of those companies almost entirely have a replacement value of asset story that makes really good sense. There's lots of people who work in all those companies who have tattoos. They don't have ponytails or top knots. Okay? So they're real companies, unlevered or now underlevered, that have paid down debt, that have free cash flow. A lot of them have a pricing cycle, and most of them are needs. They're needs-based companies. Sorry, these are really awful screenshots, but I guess I need to get you better quality one. Or people could just subscribe to Nut Stuff.
There you go. And how do they do that?
www.nutstuff.co.uk. I don't do Substack. Well, I do a Substack actually, like a sort of a teaser Substack, but we're invitation only. I write twice a week, Mondays and Fridays, or Mondays and Thursdays. And I think anyone who reads it will find it useful. It does the so what in markets. It's pretty global. We're pretty unpolitically correct. And I think we try and say things how they are. And I think we complement what Piers does really well. Piers is very much, the flies up and down the window on a daily basis. And we're looking more at the building and the windows from a distance. And I think that's quite complementary.
Talking about windows, Harry saying you've got a strong set of frames on you there, Will.
Strong frames. Love orange. Orange is a strong color.
Now, just before we go, we're going to look at the US Open in a minute. We're going to go to the live. We'll have a look at my portfolio as well, of course. Just before we say bye to Will, this is one of your thoughts at the moment. What if China, Russia, and India align? Think about the next global boom not belonging to the US if you live in the Western world. How do we look to play that in a specific way? Not just EEM, but what other ways can that be played?
Well, I think it's a lot of it's what you don't own than what you do own. I think the world has assumed for the last 15 years that US is sovereign, US is US is best, and I think there's going to be a significant balance. Now, I don't think there's going to be. I think there will be a deal done, with Taiwan, China. I don't. I think there's a very obvious diplomacy to be done there, and maybe the escape valve is semiconductor, is Taiwan semiconductor free. But as I say, I think right now it's you don't need to think about it much more than where everyone is. You know the cave where everyone's crowded. 37% of the S&P is still the top 10 stocks. I think that goes to 25 or 26%. And so, very simply, by not owning the index and owning specific equities, I think you're even owning equal weighted S&P, and being short market cap weighted S&P. I think even there you're gonna get a 10%.
And it's been big already, hasn't it? It's probably already been 6 or 7, 6, 7.
Absolutely. I mean, where our little fund is up. I don't know what we're up. At 3.5%, 4%. We've had a 2.5% currency drag. So the currency's been the sterling's been tough. I'm not even going to get into why that's the case.
One thing I said on Discord yesterday, it's bloody hard just now, isn't it? The last few weeks have been really tricky to make money.
Yeah, really tough. I think really tough, and especially tough if you're in any shape or form have got a kind of quasi-passive strategy. I think about the stuff I've owned. We bought some Crocs, we bought some Harley Davidson. I shorted, I bought Harley Davidson against Formula One. I think Formula One is massively expensive, massively becoming boring. But I think there's some really good thematic stuff. I think you're going to make money by taking some fairly high conviction, pros and con bets here.
Yeah, like it. Good stuff. And can people find you on Discord as well?
No, I don't. I'm not on Discord. I'm 57 years old. I could just about actually find me on Telegram. We've got a good Telegram account. We're building our Telegram account, and I'm trying to do a couple of sort of minute and a half videos, twice a week. So you'll find us on Telegram. But as I say, the best thing of all is frankly sign up, get a free trial on that stuff. If you like it, you like it. If you don't.
Good stuff. The link is in the notes there. Will, thank you very much for joining us and filling in for our man Piers while he's sunning himself in the pharmacy.
Well, if he dares, we'll get him on at the same time. We'll do a threesome.
Yeah, that's a horrible thought.
Look after your owie.
Thank you very much. Right, we'll see you shortly. We'll be back in 30 seconds for the US Open. Join us then. See the big movers after the bank holiday yesterday. Straight in, Luke Moore joining us here. Luke, how are you?
Hard cut. There was an advert about cutting the commissions and then a hard cut straight into me. Yeah, good. It's been a while. I haven't been here for a little while. I haven't been invited.
So what's that?
Haven't been invited.
I thought you said you'd been fired. Jeez. Right, let's go straight into see what the big movers are on the open then. Luke, take us through them.
Yeah, look at that. Top of the pops. Spotify coming out. The blocks up 2.2%. Airbnb, City up 1.5%. McDonald's 1.2%, and then Walt Disney 0.5%. Not particularly interesting.
There's not many tech stocks on that leaderboard, is there?
What about at the bottom? Let's see what's going on at the
bottom. PayPal is, of course, one that the Apex Alpha crew love. PayPal recovering back above 40, which is interesting. Mm-hmm. Nike at 64, and Uber is probably my only stock that's up today by the looks.
Nike nearly leading the charge in the Dow at the moment, near the top into the performance over there.
Should we have a look at losers? I'm a bit scared to.
Go on, let's have a look at the losers.
Right, there is the Micron. That's fine, don't mind that. AMD, a little bit painful. Palantir, I'm short the puts on that one, so that's down 2. What else are you seeing?
Well, it's just a continuation of this money flowing out of the hyperscalers. Alphabet there with another 1.6 coming off. Oracle down 1.9, Tesla down 2, Microsoft down 0.7. It's just a continuation of what we've seen before the break, really, wasn't it?
It's funny, isn't it? Because Palantir was only down 40 basis points at 9 a.m. this morning. So it's this, like, as we get closer to the US Open, it just goes, doesn't it? It's like somebody presses a button and the basket starts to thump them.
Well, I wonder if it starts moving at 12. But back, we had a couple of different prime broker relationships a while ago, and we've kind of improved them and stepped forward into this 24 hours piece. But we were only able to access the market from 12. We could trade OTC, so spread bet CFDs from 9, but we could only trade share dealing from 10. I think it depends on what brokers give which people access.
And I guess just the Americans are waking up as well.
There's a bit of that, but most of these things are algo trading anyway.
Yeah,
So a lot of these things are just like, right, sell program in over the first X amount of time, sit there and get rid of it. And look, AMD now down 3, Micron down 3.5. I mean, this momentum's really starting to kind of catch up.
Now, here's an interesting one, and this is the topic of the day. Netflix, up 75 basis points. Now, that has been carted since we last met on air. We hear this morning that Paramount are now flirting. Again, they're back in the picture, just as Valentine's Day has passed. Warner Brothers saying, oh, okay, we thought that we were in a long-term relationship with Netflix, but shall we have a chat?
Yeah, well, I think the key development this morning is, of course, Netflix have granted a 7-day waiver, which is going to end on the 23rd of Feb, to engage in discussions. So Warner Brothers coming back to the dance floor. What was the latest? I think this is the 9th offer.
Is that right?
For them, which is quite impressive.
Shall we have a look at the Warner Brothers price? Because I imagine that must be up 4% this morning, would you say?
There you go.
3%.
3%. But I mean, it's remarkably stable, really. I mean, kind of that flat line for the first 2-3 weeks of January was, of course, because it was considered a done deal. Then it wasn't, and now it's seemingly coming back on. I mean, I think the interesting thing here is about the breakup of what people want, right?
Yeah.
It's about what people are buying it for. So Netflix, they clearly want the studios. They clearly want HBO Max. They clearly want more eyes. Whereas Paramount need the content, because if they're going to drag people away from all these streaming wars, they need to keep having the content coming in.
So why aren't they splitting things?
I mean, what do you split up, right? What is in here specifically? So you've got CNN, TNT, and Discovery, your live stuff. You've got HBO. You've got a small gaming division.
Big fan of HBO.
Yeah. Actually, no, that's true. Yeah, I am. Industries on HBO, isn't it?
Yep.
But then that's being plumbed back into BBC.
No, BBC started it and then
HBO took it up.
Yeah.
And then what? You've got Game of Thrones. I think, is that HBO?
I think HBO back in the day was.
Hang on, we got these.
What was his name? Vinny Chase.
Vinny Chase.
Do you remember Vinny Chase?
I tell you what, I do know. I remember one of my favorite shows of all time. Do you remember Chernobyl? That drama. It was like a 5-part series. That was gripping. Right, hang on. HBO series. Game of Thrones. They've got interesting. They've got the rights to the new Harry Potter series. The Wire, Sopranos, Oz, Band of Brothers is all HBO. So they've got content.
If you were the Netflix management and you were looking at the city or Wall Street's reaction to this, your stock was at 105, now it's at 77. If you walk away, are you getting a 50% bump in your share price? Plus you're getting $2.8 billion from Paramount.
Probably not. It probably doesn't pop up immediately. You might start to get buyers come back and look at you. The problem is, though, I think we can safely say Netflix has won the streaming wars, right? I think the majority to watch something on Netflix is the Hoover, is the kind of colloquialism, right? So certainly it's one hat some eyes. But then you look at the kind of where it's going now, right? YouTube now is where a lot of the kind of generation go in terms of podcast people, in terms of people trying to get live content. They go to YouTube first as opposed to the more traditional media. I think I watch live sport. Everything else is pretty much on demand. So right. if I'm part of the audience, I'm not a very good live TV audience, so you don't really want any of that stuff.
Do you watch YouTube?
All the time. YouTube Premium is by far the most used subscription I have.
Right. Wow. And you're subscribing to this page, I hope.
I am subscribing to this page.
Is everybody else subscribing to this page?
Hey, nice little plug for you there. Yeah, Alphabet's just on its own different level at the moment. But I think it's just.
What do you think Netflix is up if they walk away?
10, 15. I don't think it's an immediate bounce back. You'd have to get clarity on how much money they've spent. Yes, they get some of the breakup costs. Was it 2.8?
2.8 billion.
2.8 billion.
Can't cost you that much to put a deal together.
No. But I mean, the Netflix's market cap is what?
Well, a lot less than it
hundred?
was. That's the problem. It's down 40%.
It is 327 billion. So what? 1% they get cash in terms of their market cap.
Yeah.
Right. So then it's about how that filters into forward. Look, Netflix need content. Okay, that's clear. To continue to have people continuing to pay their subscriptions. Yes, I think they've won the war and they've killed off the Disney Pluses, arguably. What else is there? Amazon Prime, Apple TV, maybe. But Netflix is the beast, and Netflix needs content.
Right, let's have a quick look at the portfolio then. Look, feel free to jump in, because I tell you what, it is bloody hard to make money just now. You'll see the total from last week. We're scrambling. We're actually up a little bit, and that is thanks to a beautiful thing called Relics. So Relics, we said last week, I bought it. I think it was live on the show actually. I bought 500 shares at £20.45. It is now 10% higher, so we're making £1,000 there. But as you can see, I am having to really pull some out of the bag there. I've sold a end of month NASDAQ put down at the 22,000 level. And because the NASDAQ was so volatile last week, I actually managed to take in 50 points from that. So that's helping us. Then copper's been terrible. I'm getting stung on copper. I had to cut half of it. I've traded around that a bit, but probably down about £700 on copper.
To me, that's just the metal space. I think everything that's been moving around the metal space the last 6 weeks, the structural story around copper is not going away, right? The kind of physical world, the broadening away from software and kind of things that are very asset light, going into things that are asset rich. That story is not going away necessarily. I just think you've still got this leverage that seems to be kind of playing its way through the system with this silver move and the unwind and coming back.
Well, we'll come to that later on today. Gold and silver getting strum again today, aren't they?
Well, it's just a normal day in these things at the moment, isn't it?
Getting back down towards the lows though. Microsoft $398, that's costing £1,000. As you can see, Netflix there. Netflix, I rolled down that put option, so we were short 80s. I'm now short more of the 73. So I was short 500. Well, I was long the equivalent of 500 shares, now long the equivalent of 800 shares. So we're getting bigger, but of course rolled it down to the 73 level. Oracle was at and back is. So Oracle bouncing. Oracle's paid us really well, up $1,500 in that. That's helped a lot. Palantir has cost money, $2,500 on that one. Relics is helping us. Robinhood is a new addition. I think I might have bought that after the last show because it was terrible, wasn't it? 12% on numbers.
Yeah, and on fairly decent numbers as well. I think they had a big question mark over their gold subscription levels, which wasn't growing at the rate of knots that it was before. But it was still huge amounts of incremental revenue they hadn't had the year before. It was just these crazy kind of growth targets they put on these things. Look, I mean, Robinhood is, I suppose, a business fairly adjacent to our own, strives with opportunity in market. So
volatility helps.
Volatility helps, correct.
What has helped a lot is I am short $50 a point of the S&P 7,500 calls, right? So remember, when we sell calls, we're saying the market is not going to go up significantly in the coming few months. I took advantage on the day that it dropped and bounced to sell some 25,000. That's paid us $700. So that all these things are just helping taking us back up because have had some shocking calls in Palantir and Microsoft. And in Uber. Uber is also hurt, down $900 in that.
Again, it comes down to this kind of theme that we've been seeing and speaking to clients about is the market is trading. If you're in these specific names and you're getting hurt, it's painful. Right, and the S&P, okay, the actual index itself is coming off slowly, but the equal weight is absolutely flying. So so I've actually just taken the step to broaden out my ISA So I've come out of the cap weighted and into the.
Oh, you have?
I did it this morning. Yeah.
Nice.
Yeah, I'm kind of buying the breakout on it. You know, I think we've got a movement here from things that have been built with code into things that require things to continue to allow the code to go where it is.
Old school industry.
Yeah, old school. I want to be more long materials. I want to be more long energy. I want to be more long these things I have been.
Look at this. I mean, that looks very different from the way that the rest of the market feels right now. And it's a completely different market.
Completely.
Right? You're trading two completely different products.
So think about what you're in here, right? So I was doing the work. In fact, I was doing my homework last night. The cap weighted only gives you something like, you know, it's less than 1% exposure to. Hang on a second. Fill time. Ba, 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 ba. So you've got.
So this is talking about the percentage weight. Remember, the cap weighted that Luke's talking about is the normal S&P 500. So 34% of it is those big tech stocks.
Yeah. So here it
And
goes.
whereas this, the very maximum is 1.5% of any one stock.
But then it goes into each different sector depending on who's in there. So to compare the market cap weighted, Mag 7 is a third, okay, of just the S&P.
Sorry,
The S&P 500, right? So we're calling that the cap weighted third.
Yeah.
That goes to, under this type of logic, about 1.5% each per company.
Okay, so 10%.
So 10%. Utilities goes from 2% to 6.5%.
Right.
On the cap, compared to the other one. Materials, which is ultimately where a lot of these stories are coming from at the moment, goes from 2% to 8% weighting. And industrials, you double your exposure.
Okay.
So data center builders, hardware suppliers, everything that we're talking about, the physical world, doubles your exposure. And that's what this is. This is demonstrating that the hyperscalers who, if you look at Amazon and Google, have traded like trash since they decided to double their capex last week. And the market's now basically saying, I get it, go and spend the money, but you know, we need a return on these things.
Amazon going through the lows today, actually.
Yeah.
Look at that.
Tough. I mean, I'm kind of talking my own book a little bit, but I've got Alphabet in my account because I like everything that they're doing in terms of being fairly vertically integrated now. You know, they've got power coming in, but they're just getting killed, absolutely killed.
Along with all of them. As my P&L, look at that. We've gone from up 400 to down 600. Let's have a look at the futures now to see what is going on. It was a rally. The S&P tried to rally, but we have got silver now down 4.7. We got gold down 2.5%. My goodness me. Gold moving.
But you look at those metals moves at 2 o'clock, you saw a huge move higher and we've sold off straight away. So it's volatile over there. It's volatile.
When they start playing with something new, they really destroy the market, don't they?
Well, you've got different participants in this space now. You know, the people that are buying physical silver is because they need to use it as part of their industrial process.
Yeah.
You know, and then you had all this rampant speculation that happened over there. And look, you know, everyone had a great run. Hopefully didn't get too burnt on the way down. But I just think you have this period of reaction and trying to digest that volatility in a market that's so specifically one-dimensional and not normally used for it.
Yeah.
The chart that I'm looking at, though, is IGV. I've got IGV, the ETF.
Let's get into that.
To me, this is the one I'm looking at and paying a lot of attention to. And actually, Happy Tyke, I see your comment there about Raspberry Pi. I think that's interesting, and we'll talk about that in just a second because it slightly aligns with this. Just zoom out on this. So this is your Mag 7, but it more broadly speaks to, look at that for a bottom and a potential double bottom. This is more broadly the companies that are supposedly being disrupted by AI, right? If Claude Code can go and build you an entirely custom CRM system, the expectation is, are you going to go and build and buy and license a new service now, like 2 or 3 years, or a new Salesforce setup? You know, and I know from kind of conversations I've had internally, people are asking question marks about whether these things are worthwhile continuing to invest in. That's what's doing the damage. Now, this is the same chart as Bitcoin, basically.
Interesting. Yeah.
Since October. And it's so correlated that I think everybody that's hurting in software at the moment.
It's a leverage
This isn't a leverage. This is just an ETF with a basket of those names.
No, but I'm saying, so obviously Bitcoin and this have nothing in common, right? Apart from the same holders.
Correct. Yeah, exactly.
So it's a
Same holders.
deleveraging, because they got smashed in Bitcoin in October. So then you've got big losses there. So you start to cut elsewhere.
But also think about the people that own license tech platforms. You know, those people are going to be probably your West Coast Americans and your tech investors.
Yeah.
And they're probably the same people that own Bitcoin anyway. So there's a correlation there. I mean, I think the interesting thing here is I don't know if I'd buy this. That's a pretty scary looking bottom. Like, you know, does this need to move higher? Meaning some of these software companies need to start shaking off these concerns in order to bring a little bit of love back to that Mag 7 space.
Yeah, the way I think about it is remember this little puppy. Was it Regional Banks was...
KBW, I think, is regional banks, isn't it?
KBW, yeah, that's the one. Thank you, sir.
So they're breaking out.
But remember when they all got killed together on SVB. I think that's where we are.
Here.
Boom. I think that's software at the moment, right? And yes, it consolidates, but the ones that are okay start to rally again, and the ones that are in trouble get killed.
Well, I suppose that, you know, let's look at a business like Salesforce, right? Just pull up the Salesforce chart. Salesforce in itself, in terms of what they're selling, is, and where are they down? They're down 2 today. You know, these are big corporate contracts, and these databases have basically every single piece of information about your customer.
Yeah.
Now, you know, the reason why some of that Raspberry Pi is quite interesting. Have you seen all this stuff over the last couple of weeks about OpenClaw and the agent work that they're doing?
No, go on.
Oh, this is the reason why these things are all getting killed. So someone vibe coded effectively an instance of Claude, but gave it the ability to do certain things.
Okay.
So not just, you know, create me a report. It was like, here's a credit card, go and do my weekly shopping. And so it was the first instance, and this is probably 3 or 4 weeks now, first instance of AI becoming a genuine assistant.
Yeah.
Anyway, the guy that started this got hired yesterday by OpenAI to go and build out their capabilities.
Wow.
I mean, I can't believe you've not spoken about this on the show. Like, the stories you're getting is, someone said, you know, they've all got these little lobster monikers. That's why it's called OpenClaw. You know,
Right.
I need to create a database of something, and off you go. And if you need anything, come back to me, and it would come back, right? Okay, I need to license this. Off you go. And now, you know, one story I heard is that the agent had gone on the internet, found dormant gift cards from a website, used that to pay for a SIM card, went onto the OpenAI voice-based API, pulled out the voice, and then called the bloke when it was done. I can't believe you haven't heard this story.
Well, where do you hear these stories?
It's all over. It's been all over X. It's been all over. Like,
There's a start. I don't go on X.
oh, right, okay, well, there's your start. It's the only place to be to kind of catch up with all this stuff. Anyway, so the whole point of this has been, people are downloading instances of this kind of agent-based framework. They're putting them on private networks. So Apple has all of a sudden completely sold out of these mini Macs.
Right.
There's none left because these OpenClaw trade developers have gone and bought them all. They've all flipped from being on Claude to some of the open source models. So they're hosting these models locally.
Right.
And that's the reason, in a roundabout way, why Raspberry Pi is really interesting. Because what do you know about Raspberry Pi? And what do they do for a living?
Chart up here.
Raspberry Pi create computing in a small basis with very specific tasks. And someone noticed. Put it up on the chart, on the screen.
There you go, guys.
There you go. So this is probably about the time that Mac and Apple started to sell out of these devices.
This was yesterday morning, right? So somebody over the weekend.
Figured out that you can use these devices.
And did a bank go out with a story on it?
I don't know. I don't know that. But certainly, what's that? So
CEO buys stock. So the CEO has bought shares 282 on February 16th.
two London traders say the driver behind the surge is not immediately clear. It's because people have started to see that these things can get used to host these agent-based AI systems. So the reason why Salesforce is a good example of that is, in theory, you could now sit there and tell these things to go from start to finish, build me a database that does X, Y, Z, and hosts all my client data, right? Mm-hmm. The challenge is who's actually going to do that, right? We sign a Salesforce deal for like 5 and 10 years in advance, and you're locked in, and everything that comes with it is you've got service, you've got support, developers, et cetera, et cetera. Now, businesses aren't going to go and change that overnight because you can't. You can't break these contracts. They're expensive.
Yeah.
And so the conversation is a Salesforce genuinely going to lose money in the future about all of this? Maybe. Maybe people ask different questions of Salesforce, and maybe they need different things to be brought into their contracts, or they, maybe they pull things out of their contracts because they can build certain things locally.
Yeah.
That becomes interesting. Is it going to disappear? I doubt it, because regulated companies aren't all of a going to start vibe coding and chasing things. But it is an interesting turn in the thought process.
Well, the reason why I'm so interested in Relics, right, is because that's been thrown in with the software names, because it's got 20% of its business is the law business. Mm-hmm. However, if names like this get beaten up too much, and you can see it really has since this theme took place. So what are we, £38 down to 22? So you're down 35%.
Yeah.
Actually more, so more like 40. This is where private equity come in and they buy it and they split it up, and you spin off the law and you just let that generate cash until it is killed by AI. Because like you say, this isn't going to be a 2-year story that this happens in.
No.
Salesforce is still going to be generating cash.
But I think what's interesting is you better have a big moat, because it's coming for you, right? Last week we saw it kill the transportation business, and a bunch of trucking stocks got done. Week before that, it was all the legal companies, including Relics, that have just been killed. What I'm finding, and where I think this is going to go, is you interact with a Claude or a ChatGPT and you plug it into certain things. Mm-hmm. So you don't end up using the software directly, but you use what it does and plug it into Claude, you plug it into ChatGPT. So your interface becomes Claude and ChatGPT.
So who's the winners then? That's OpenAI coming back into
Well, OpenAI, I don't know. I mean, obviously they've gone and bought this guy, Peter I can't remember his name, and it was yesterday, the OpenClaw creator. It's the reason why I've moved and kind of broadened out my S&P exposure, because I am and continue to be a dollar cost averager on my long-term accounts on something fairly diversified. But I want to be more exposed to the chemical companies that are going to be required to build plastics for these data centers.
Yeah.
The kind of fiber optics companies that are going to be...
Why stay in the US? Because this was our big discussion on the pod last week. Is there more a case now for something like the Stock 600 or India or Japan? This necessity for people to be stuck in the US.
It's a good question. Yeah, it's a good challenge. I mean, Brazil, I've been reading about, is looking really, really interesting at the moment. They've got, I think I read that they've got almost 1,000 basis points of rates that they could cut into. And the stock market, I think, is looking okay. I think it's starting to look like it breaks out. I think they've got a lot of the raw materials.
Have we got an MSCI Brazil?
I'd imagine they do, yeah.
Yeah, capped.
Yeah, so that's really looking quite good at the moment. I heard you chatting to Will there about, was it EEM?
Yeah.
The emerging markets way of doing it. You got, one thing to just be a bit more specific around where you go shopping. It's just looking so good out there. It's just looking good away from the US. It's a great market for it, though, all of a sudden. Do you know what I mean? You've just got to be a bit more open-eyed. You've got to be a bit more open and aware of what's going on.
You certainly have to take your blinkers off on tech.
For sure, yeah. I mean, Anthropic, I think Anthropic is winning the war when it comes to big model companies. We've got a public, a grey market you can trade on the platform. But they're no doubt going to IPO at some point this year, as they continue to just want people, to try and raise capital to continue this race.
Where do people find that on the platform?
If you go to watch lists and you go to IPOs, watch list IPOs, and then you've got Anthropic down there at the bottom.
It's interesting to compare them, isn't it? OpenAI has not budged That thing's been stuck at what that 1.1 trillion. That's right, isn't it?
What do you use? What's your weapon of choice?
Oh, ChatGPT.
ChatGPT. Okay.
Yeah.
I don't use it at all.
It's funny that people still call it ChatGPT, even if they're using Claude or something.
Yeah.
I'm going to ChatGPT it.
Yeah.
Boom.
So funny enough, I use. What did you do?
Ouch. So watching, I don't know if people have been watching the Winter Olympics at home, but obviously.
Have you told the story on air already yet?
No.
Okay, fine. Come on. Let's. So tell me what you've done to your right wrist.
Did you? Obviously, the main thing at the weekend was Scotland England rugby.
Yeah. There's no need to rub it in.
And your wife's Scottish, isn't she? So
Yeah.
How was that?
Yeah. If you saw either mine or Instagram, there's a picture of me looking like this. She took a picture of me, and I didn't even know she was doing it.
What a match!
Yeah.
So anyway, so after that, I was up in Scotland watching it in the afternoon, but then also with my mum, we were watching the Winter Olympics at night. Mm-hmm. Now, Winter Olympics is another basically Scottish event because it's all Scots, right? Because if you ski, you ain't skiing in Milton Keynes on the dry slope. Yeah. The curlers are some of them from Perth, which is where I was born, mm-hmm. and then Kirsty Muir's from Aberdeen. Like, you know, it's a very Scottish heavy event. So we're watching that, and incredible the snowboard cross when the four of them all race each other.
Yeah.
And we won gold in that on the Sunday. So Sunday afternoon, I was celebrating, like, you know, buzzing, the national anthem playing in the background, and went up the stairs and tried to do some kind of ski jump at the top of the stairs, and my hand gave way and I landed. I must have been 3 foot in the air, 6 stairs up.
Yeah.
Completely lost all thing and just went down like a sack of potatoes onto the stairs, winded myself, landed on my rib, so I think I've cracked a rib, and then fell down the 6 stairs and landed on my wrist and my thumb. So that went well.
What's a man like you of your age doing a kind of kids move? Come on.
Well, I think that's the problem, is because it's the same house that we grew up in. So it's obviously something I did when I was a kid.
Yeah, it just felt natural to do it.
Completely natural, and I was buzzing because of the gold medals and everything, and boom. I do need physio. I think I need more than physio, to be honest, because if we look at the difference in the sizes of my wrists, then...
I think, Peter, I met you right. The ref was shocking. No comments about it. Should have never been sent off the first one.
Red card.
The yellow card was never a yellow card in the first one. Shocking.
Good stuff. Right, so what is going to happen next then, Luke Moore? What's to watch this week?
Look, I think the story. I think this story around software. I think that level has to hold on IGV for us to kind of move higher. Mm-hmm. Otherwise, the sentiment, next to the price moves, the sentiment just looks difficult.
Awful, isn't it?
Yeah, difficult. I mean, out there in the macro market, headlines seem to be quite concerned about these Iranian talks. Mm-hmm. I don't have many clients asking me about it. Doesn't seem to be a story that's front of mind of the people that we've spoken to so far this week. But I think it's, headlines are a little bit messy.
Yeah.
Here's a comment, there's a comment. So one of those things to keep an eye on. And I think we've got CPI from the UK there tomorrow. We've got GDP from the US later this week.
Not great on the UK unemployment this morning, was it?
No, nor the wage growth. No, it wasn't great. Pound weakened, FTSE moved higher. Wasn't huge amount of story. And then FOMC minutes tomorrow night. So it'll be interesting to see how Mirren has been trying to drag everyone lower.
I love it. That's a great reason to be in the FTSE. Just because the worse the country gets, then the FTSE just goes up anyway because cable's trash.
Well, have a look. Let's see what's moving in the FTSE today. Because yes, the FTSE has been amazing this year, but it's a continuation of the same theme. It's an index full of things, right? And it's the reason why it's been left behind over the last 6 to 7 years is because it hasn't had code, it hasn't had platforms, it hasn't had software.
Yeah.
And now look at us, we're a shining light out there.
Shining light. So there you go. RELX top of the leaderboard, up 3.7%. And then you've got the house builders, the farmers, Pearson, the publishing house.
I tell you, the miners are getting absolutely killed today.
Oh yeah, let's look at the other side.
The other end of it, Antos, Fresnillos. So Antos had numbers. BHP had numbers and looked pretty good in Australia overnight, but Antos had numbers and just getting absolutely slaughtered on them. Yeah, that's kind of flying in the face of the materials trade, but initial reaction, we'll have to see what's moving in Antos. I didn't actually got a chance to read it. Did you read it this morning?
No, it just would. It's one of those things that when a stock is bid up and bid up and bid up, like the whole sector's been bid up for a reason that is a thematic reason, sometimes the numbers come back just to give you that little slap in the face. Yeah, it's a bit like BAE, right? British Aerospace. Numbers later this week. Everybody's talking defence spending in the future. I would be a little bit concerned about the numbers today.
Did you see Seraphim was a space name that we were talking about before when I was last on? They upgraded a load of their portfolio valuations yesterday. So they came out the gate strong yesterday. I actually haven't seen them today.
Oh, actually.
But they were a big beneficiary of all that defence spending here in the UK. Yeah, another up 2% today. Not bad.
Now, Will did say that one way to get exposure to Elon Musk is through Scottish Mortgage Investment Trust. And that is one of your investments, isn't it?
Still one of my core holdings. Yeah. So their biggest, take the name away from it, because I think it's they're a bit of a victim both of maintaining the heritage, which they should do, but also a complete misbranding. So they've got nothing to do with mortgages whatsoever. They are a kind of mixture of public and private investments managed by Baillie Gifford, I think actually one of the UK's largest real REITs, because they've got it's a closed-end fund structure, and their largest holding is SpaceX.
Yep.
Last I checked, it was something like 15% of the fund. So people are allocating towards it at the moment in order to try and cap some of this upside. And pretty much, that move higher is when you get the headlines about SpaceX with XAI merging and IPO stories and everything that comes with it. So yeah, it's an interesting one for sure. But again, don't listen to me. I'm talking my own book.
Good stuff. Right. Matthew just answered that question. Yes, you got hit on the stop on, I put a short, narrow stop on that gold miners. That got hit. And Daniel saying, any advice about the risk, give me a ring. Okay, Dr. Daniel, thank you very much.
15% SpaceX is Scottish Mortgage. 15% SpaceX, 6% TSMC, 5% Mercado Libre, 4% ByteDance.
Well, that's Mercado Libre, another one of Will's names, actually. But that percentage probably goes up when it gets close to the IPO, doesn't it?
Correct. Yeah. I mean, you'd expect the valuation is who knows what it's going to value at. Biggest IPO of all time, no doubt. Whether they trade well off the back of it or whether it's used as exit liquidity for a lot of people is to be seen.
Good stuff. Luke Moore, thank you very much for joining us once again.
It's good to be back.
The friend of the show.
Haven't been in the hot seat for a little while.
Right, so tomorrow we have Imran joining us. Imran, of course, an options expert. We're going to be walking you through the basics of options, and Imran has worked at Citigroup, he's worked at Credit Suisse, he's worked at Morgan Stanley, so he knows a good few things about these markets. We're going to be going through the moves specifically around vol. What does Imran view volatility to be showing or predicting at the moment, and what are your additional ways to play it, and what are the things to avoid? So that's tomorrow, 2 p.m. We'll see you then.
See you then.